Hello, everyone. I'm Jeff Gaines, your host for this first Henry L. James and Company live webinar. As we go through, you can write down your questions for your Q&A at the end. My guest today is Senior Advisor at Henry L. James and Company and a known financial advisor, Mr. Michael Brooks. Hello, Michael.
Hello, Jeff.
So, Michael, why don't you tell us a little bit about yourself?
Well, Jeff, I've been in finance since I was a quote-unquote kid. Had great marks in school and decided to go into finance. Sort of a think tank for picking stocks. I didn't really like public stocks. With stocks, I thought it was about fundamentals. It turns out it wasn't. It's mainly emotion. So they're not subject to the fundamentals, and it was quite frustrating.
In those early days, what is one of the key things you learned that you could share with us today on this webinar?
Well, of course, I learned how to thoroughly research companies, stocks, the market, also what make investors tick. Seems like I was studying 24/7 and not really getting much sleep. Quickly, I found out, though, that although customers had the best of the best finding them great stocks, that is, us recommending great stocks, if they lost, I took it personal. I felt bad, which is a no-no in that kind of business. The other advisors seemed fine, and as I say, I felt horrible. So eventually I took my experience and ran private companies and helped individuals with their portfolios.
Sounds like you're not a fan of the stock market.
Well, no, Jeff, I'm not. I mean, if you're very wealthy and you know how to ride the emotions, not the fundamentals, but the emotions of the market, ride the news cycles, you might do all right. Look at Warren Buffett. But in my opinion, most investors should not even be in the market. It's highly overvalued and based purely on emotion. For example, today the market size is about 22 trillion. Well, the entire U.S. economy is only about 18 trillion. So, clearly there's an imbalance. Uh, Without getting into price earning ratios or all that detail, the bottom line is that the market is trading much higher than the value of the companies. This doesn't mean that I think the market will crash or anything like that. On the contrary, the recent announcement of tax cuts, even more money. We've had about 3 trillion since October flowed into the stock market. The announcement of tax cuts, more is going to be flowing into not just stock but also the private placement market. Private placements are just so much better. If and that's a big if. You know what you're doing. I mean, you want to buy a stock at 100 and hope it goes up a few points, or do your research, buy a private placement at $1 and watch it go to 100. And that happens a lot. Someone buys a stock at $100, maybe it goes down a few points, maybe it goes up, but either way, it's not that much. But if one, which most people don't do the research on a private placement and find a good one, yeah, you can get in $1.50, $1.50, watch it go to 100, 150.
Yeah, that makes total sense. I've heard that before, by the way. That is, if you want to invest in stocks, do like Warren Buffett, find a company you'd own yourself.
Right. But who has the resources to investigate thousands of companies like he does? Likewise, Buffett is at the whim of the emotions of investors also. We get a correction. Everyone panics and sells. You ever notice that? They announce the market's dropped and it's dropping and it's dropping and it's dropping. What happens immediately after? The news anchors come out. They have every financial so-called expert in the world coming on there, telling it's all right. Don't worry about it. It's a great buying opportunity, and it works. I mean, it's like mass hypnosis. I mean, it really is. There's no reason for the market. There's a reason why the market went down, and there's no real reason for it to go back up. But by telling us all that it's great, people put their money in it, and lo and behold, it comes back.
Yeah, I've seen that. No matter how dire they are, always bullish. I've never seen one say, I think this market is going to continue to drop. They're always positive, it seems. What brought you into private investments, Mike?
Well, I continued my education, and with my resume, I could really go anywhere. I became a full advisor for different companies, different individuals that had high net worth on other investment vehicles, and then doing it at my own pace, it was much, much easier, much less stressful. I found private offerings were not subject to the emotion of the markets, uh, wasn't subject to the news cycles. And so, really helping individuals, helping companies, my main job was mainly saying no.
Mainly saying no. Why was that?
Well, I mean, if I could say, most invest without knowing what they're getting themselves into. I mean, stop and think about it. Who really has the time to go into all the fundamentals? You're a wealthy movie star. Are you really going to go into all the fundamentals? They should, but they don't. And so they hear a great idea and sounds good to them, and they start throwing money at it. But they don't know if there's a good payout. And as I say, they largely invest on emotion. That's what most people do. They hear a great idea, they don't know if it's viable, they don't know what their payout is, and they invest. So my job was mainly saying no, and then making recommendations on other things that I had researched out.
So your job was basically to protect them from themselves.
Right.
What is it that you'd research on private offerings?
Well, as I say, most invest without knowing what they're getting into. Not just movie stars, even investment houses hear a great idea and invest, which really is remarkable. To them, the way they look at it is, well, it's an exciting thing, so our investors are going to get excited and come in, and we'll make a lot of money on it. And that's just, in my book, unethical. Again, I keep taking us back to the basics. Is the company viable? Does it have a great payout? Does the investor know what they're getting paid? When are they getting paid? Under what circumstances are they getting paid? Okay, you're getting X percent. What is that based on? So, everybody out there wants to get rich quick. I'm no exception. It is possible if one knows what they're doing. Not get rich quick, but they can do well quick in the market. A lot of people have done well in the market, and that's just a fact. But that doesn't mean to say that everyone will. People read about, or we've even announced, private placement Amazon, 100,000, and Stanley gave us $3.8 million return. That doesn't mean it's going to happen with us over time. Maybe, but that doesn't mean that's going to happen with us right away. Or Amazon, which was one of the bigger ones, 100,000 in. It's like $224 million. But for every winner, there's a graveyard of losers.
That makes sense. So basically what you're saying is if the company isn't viable and there isn't a good payout, then the investors are going to lose.
Right. It's viability. But let me give you a good example. Someone invests in a new app. Okay, it has great demand. Many even use it. So it's got a name. People are using it. Does that guarantee you as an investor will make money? Of course not. What if the spread of the company is too small so they can't pay investors anything? The key to investing really is a solid, sure payout. A company that's viable. So you can have a great idea or a real company. Which one would you rather have? I'd rather have a real company. Okay? What is the payout? How do I get paid? These are the questions that are rarely answered at all. For example, Jeff, I put $100,000 in Microsoft when it was a private placement. You respond, so you're rich, right? No, I only got an 8% note. So, as you can see, I was in and out, So as you can see, things make a huge difference on investors' actual return. And as you know, I work out there on the sales floor to answer investor questions. I run into this all the time. Someone will say, I have $500,000 in X company. First question out of my mouth, what is your payout? And I hear the phone go silent. At that point, I know they had never bothered to check. And it's sad, but investors are responsible too. They need to do their part. So, when you hear people losing 100% of their investment, which happens, this is really the main reason why. They never stop to check the payout.
Yeah, absolutely. It seems like there's probably a lot of people out there that could have used your help at first.
Well, yeah, I wish I could have been consulted with them before they wasted their money on some idea. And a lot of them have done that. Just here. forget the 20 plus years experience I've had where I've seen it, just here. I mean, it just seems like it never goes away. I come in here, I think investors are going to be more sophisticated. I get on the phone with them. Oh yeah, I put money here and I put money here and I put money here. What's your payout? I don't know. On one, we figured out that if everything went well, if everything went great, then make a few percentage points. And that person was not too happy with me. But, you know, it's just the facts.
Tell me a little bit more about these private placements.
Well, most private investors who participate in private placements will lose 100% of their investment. It's just fact. This is why the SEC has such strong warnings on their offering documents, and I rarely agree with the SEC. You ever see those warnings? You know, this company has no operating history. That is key, and it feeds right into my main point. A great idea means little. How are they going to generate the capital to pay you back? Continue it as a company so both parties wins. Most I speak with, you know, they just don't know. Second, is there a good operating history to be compared with? The problem is that there are examples of companies with no operating history, no viability, that do turn around. Okay, so it's going against everything that I just said. They do turn around, you know, return hundreds of percentage points. People see that and think it's going to happen with them, but it's really the proverbial needle in a haystack.
So you're saying when picking a private company, the advantage is that they aren't subject to market whims, but at the same time, they don't have operating history or anything to compare with.
Well, you know, again, it depends. You're right. But when you're talking about private placements, are you talking about fundamentals? That's really the issue. Now, if you were approached by Amazon when it was unknown, it's unlikely that investors would be excited. After all, an online bookstore really doesn't sound very exciting. However, with no operating history, if investors looked at the fundamentals of this one, you know, really researched it. I mean, I remember that one. They would have seen a solid plan they had. Their plan showed total online dominance of books and music. I mean, just an enormous market. The problem is that most don't research. Most don't take the time to look. You know, they hear an online bookstore, not interested. They hear oil and gas, interested. Oil and gas almost always loses. But if they would have invested in Amazon, obviously they would have made a fortune. It's you know, we do the best we can, but it's a two-way street. Investors have to check for themselves. But yeah, Amazon was a great example of one with no operating history, but just such a great plan.
Oh, that's fascinating. Never thought of it that way. I always look for the great idea, but what's the point if there's no return or if the company isn't going to last?
Well, yeah, as you know, I work out on the sales floor to answer questions, you know, make recommendations so far. So, you know, and also compliance, obviously, making sure everybody says the right thing. And I often speak with investors, and some of the things I say, you know, chill my soul.
Exactly. So what drew you to Henry L. James and Company?
Well, as you know, I'm an advisor to many companies. I get paid to help them structure offerings, but most companies are stingy. They want me on staff so they can use my name, but they don't want to pay their investors anything. It's really, really remarkable. It's almost one of the first things that they get into is how can we keep most of the money and not pay investors anything. When I saw that the company was copying Stanley Gibbons, it was a no-brainer, and I don't like that term, no-brainer. I know Stanley Gibbons. I mean, at once, thought it was brilliant, copying an existing profitable company with the most successful index in history, one that survived every economy. I mean, doing the same thing, only larger. You know, and the market, investment grade rare stamps are a high-end luxury investment. You know, some people say, well, I don't know anything about them, or I like them, or I don't like them, and it's completely irrelevant to this investment. This has really, really absolutely nothing to do with investment grade stamps. It's like saying, you know, well, I don't like soybeans and missing out on generational millions from investing in the Chicago Mercantile Exchange. or saying, I don't like Pepsi, so I'm not going to invest in it and losing tons of money. People, that's another one that really gets me. People have to quote unquote like it, and that's a surefire recipe for losing all of your money.
Sounds like it doesn't take an investment advisor to figure this one out.
Well, the rules still apply, yes. I mean, we'll be known, we'll be in all the financial publications just like Gibbons, but what do we pay? Ask the question of us. Yeah, we have a great idea. Yeah, we're copying. With this, I had make it or break it terms. When I came to him, I said, look, yes, the company has to make money and be successful to prosper, but I demanded a hybrid. Normally, it's either debt or equity, Jeff. They'll usually pay one or the other. With this, it was both. So investors have a safety net. So no matter what happens, they get 119% back, and they get to keep their shares. So that's the debt and the equity. And the shares would be net revenue. So when we make money, they make money. And then finally the IPO, which they wanted to do also anyways. I just wanted to be a better payout than any of the competition. I know everybody in the business. I know all the other people that are doing private placements. And I wanted to pay better than them so that we'd have no competition, and we don't. That way you could do a faster raise, and it's worked out quite well.
So that fits right in with your point of viability.
Well, yeah, actually, this is a better way to put it. The best businesses out there are someone who take an existing profitable market and make it better. Krispy Kreme, they did a raise. Their model was simple. They knew donuts sell. They examined Winchell's and other donut companies' numbers. They simply made a better donut. Massive advertising. It worked. Or what about Facebook? Remember MySpace? It was everywhere. Everybody was using it. MySpace looked at it, made it better, and now they're one of the biggest companies out there. Google, I mean, in the past, Yahoo was it. Google looked at it, made it better, and they're one of the biggest companies out there. And there's endless examples, really, of viable companies. Someone comes along and just makes it better. That's really how you do it, because you already know that you have an existing formula that works, right? An existing formula that works. You make it a little bit better and take all of their clients and their success. With us, we're not taking over anybody. I mean, we have this market completely to ourselves, no competition. I mean, I'm still jazzed about it, and I've been here for a while. It's like taking a trip to England, finding a massively successful company that's a secret, bringing it home, copying it. I mean, really, it's just a no-brainer. And again, I don't like using that term.
Wow. With all that and 119% return and shares, that sounds like just a great opportunity. How's it worked? I mean, with going directly to the public.
Well, it depends. I mean, when we get people, it's just like anything else. It's the same thing. People don't change. When we get people who actually take the time to listen, invest, and invest big, we've got a guy who wants to do 10 million. Well, he's coming in. Some for 500, 100,000, some as low as 5,000. But it's just like everything else. Some people, they just don't listen. They don't look through it. They don't think about it. And obviously those people are not going to be investors. We had bought a list of wealthy investors. I mean, really high net worth, and almost 100% of them went. Why? Why were they high net worth to begin with? It's because they took the time to stop and listen. You never know. Well, when a company's first coming out, is it going to be the next Microsoft? These are people that actually do the research. So when they saw this, they invested. People who are not used to it, good things never happen to them. Why bother? That's kind of the attitude, the kind of the feeling I get out here. I've also made it. I made it so we can. We talk about these bigger investors. I said, look, we need to be able to bring in people for $5,000. Most companies don't want investors for $5,000. They just want the bigger ones. But in my opinion, investors have just been, forgive me, screwed for so long. I mean, pre-2013, really, before the Jobs Act, to get a private placement like this, you'd have to be wealthy. You'd have to be part of an investment house like Morgan Stanley or Shearson or what have you. And, they might have a $10 million private placement funded in a week, but only with their most wealthy investors. Then the jobs come out. It's great that we can go to the public. It's fantastic. Give the average guy a chance to invest, but they have to be accredited. So, once again, the rich get richer and, the poor, if you're not accredited, you're not even allowed to invest in this, which this is just to me talking personally. I'm against it. So, I lowered the minimum. I'm the one that got it down to 5,000 shares minimum because, if someone's not doing so well or, maybe they got hit by the economy of '08, I want to give them a chance to invest and get back. Why should they be prejudiced against?
Yeah, that's great. So what's been your biggest obstacle?
Simple. People that don't believe good things can happen to them. I mean, it may sound corny, but it's the number one psychological factor for a lack of success. If you read any book of famous people, they'll tell you the same thing. People just simply don't believe that good things can happen to them. They see the numbers. They see $10,000 in Stanley Gibbons at a dollar yielded $3.8 million, and they see that we're the same thing, only bigger. Simply can't accept it. It's just out of their range. It's just beyond their comfort level. Other people's get a great return, sure, but them, no. So they just simply don't believe it,
Yeah.
You have to believe that good things can happen to you. I mean, there's people out there that bought Amazon at $1. There's people that bought Microsoft at $1, and they weren't necessarily geniuses. So, if there's one thing, I mean, I would highly study that. They go through that in, like I say, I mean, every book on sales, every book on marketing, every book on entrepreneurs who have become like Colonel Sanders and so forth, they all say the same thing. The number one thing is people simply don't believe it can happen to them.
Yeah, we're often our worst enemy. Where do you see the company 12 months from now, Mike?
Well, we'll have massive cash flow from flipping investment grade stamps. We'll have our investors paid back. We'll be in all the financial publications, and we'll be gearing up for our IPO. It's really quick and efficient setup process. For the first three to 5 years, our index will rise as U.S. investment grade stamps right now are highly undervalued. We'll have 50 stamp brokers on the phone taking inbound calls from radio and television. We'll have corporate sponsors funding our museum, and we'll set market price on all stamps. We'll release our catalog, overtaking stock. In short, we'll be profitable, known, just a fabulous company. We'll basically be Stanley Gibbons, only the U.S. version, almost double their size, doing the same thing. It's just a no-brainer. I'm sorry. If people don't get it, they should just go play the lottery.
That's great. So tell me, you said earlier, that it doesn't matter what the product is, like that their stamps is irrelevant as to what you're vesting in. Why is that?
Well, I mean, we've heard this a couple times in the room from, investors. I don't know anything about stamps. Again, so what? If paper clips brought me a sure 119% and there was massive demand, if there was a company, that was copying, another company that hit 387 all time. Stanley Gibbons hit 387 2 years ago. By the way, their share price is way back down, but that's only because of a foolish mistake. They took most of their capital and tried to build some eBay thing, but that didn't affect their index. Their index kept going up. I mean, their index is indestructible because it's a fixed supply to market with, ever growing demand, and so their index is going to always go up. But again, you tell me what does it matter, Or that's like saying Amazon, I don't like books, so what, or, I mean, people are their own worst enemy. It doesn't matter. The fact of the matter is that investors love them. We will be selling tens of millions of dollars a month. And if people don't want part of that spread that we're going to be getting, that's up to them. We do use this a lot. It's like saying, we're going to form the Chicago Mercantile Exchange. You can buy a seat, and for generations your family will profit. I don't like soybeans. I don't know anything about wheat. That's what it sounds like. It's just the most frustrating, illogical thing I've ever heard probably in my life.
Yeah, I know. That makes total sense what you're saying. You got to look at the profitability and the long-term investment, not the actual product. You don't need to know that as an investor.
Yeah, they hear a word and they're not interested.
Yeah.
Well, anyways, it's very frustrating.
Well, sounds like you guys got a great plan. You're marketing after a great company, Stanley Givens. You're copying them. I mean, I don't see why anybody wouldn't want to jump in on this. Why don't we open it up to some of the questions that we got here online for some of our listeners? Randy in Omaha. His question is, I invested in an airplane parts manufacturer. It was a private placement. They have big contracts from Boeing. Is it any good?
Hi, Randy. I have no idea. Again, what is the payout? What are you getting paid? Is the payout determined by their success? In other words, they're going to pay you this, but they have to do a certain amount of revenue. Do they have to hit some goal for you to get your percentage? Do you have net revenue? That is, is there profits? As they make profit, do you get profits? There's much. It sounds like you need to call in the office. We really can't go over it right now. I think I know what you're talking about, but call in and we can go over the finer details.
Okay, here's so Randy, go ahead and give us a call in at the office here, and Mike can talk to you. Ask for Mike, and he'll help you personally on that. We have Marty in Miami. Marty says, I've been to Stanley Givens when I was in England. Their office makes Trump Towers look like a slum apartment. Are you going to have offices filled with finery like they do?
Yeah, absolutely. That's funny. Investment grade rare stamps are surely a high-end investment, and our offices are absolutely going to reflect that. If you think about it, we're taking over Sotheby's, we're taking over Christie's, not with art or other things, but with stamps. We're going to be taking all of their high-end issue trades. We say this market appeals to anyone from college kids to wealthy investors, but it really is a high-end investment. So yeah, when you walk in, you'll have the champagne there, and you'll have the, everybody dressed nice and treating you like a king or queen. So we'll absolutely. That's actually, we're moving in now, so we're going to be handing out just as soon as we close out our offering. We're going to be handing out airline tickets to all of our investors so they can come out and see it. But we're pretty much starting that right now.
Awesome. Here's one last question we have. Sounds like we're closing out. What are the steps from here?
Buying up massive amounts of stamps at 30 to 40% Scott, sell it 100% at the end of 12 months, pay everybody back, spike the publicity machine, and go public. We'll be in all the financial publications. Trust me, a new financial exchange is newsworthy.
Great. Well, let's just wrap this up here real quick. Any final words for everybody, Mike?
Not really. I apologize. I've had a real long day. I'm very, very tired, kind of stumbling over my words, so I hope that you got the points I was trying to make. If any of you, have other investments, I'm happy to, at no charge, go over it with you, just discuss it with you, whether you're an investor here or not. But yeah, this is pretty much common sense, take an existing market and we're taking it all to ourselves. If you get that, great. If not, wish you best of luck. You'll be reading about us in all the financial publications. Thank you very much, Jeff, for your time.
Okay, it sounds great, everybody. We're going to sign off, so go ahead and give us a call if you're interested. Thank you.